In today's video, we're going to take a look at the June 2024 housing market update for Cedar City, Utah and St. George, Utah to give you an idea of what these market trends have been doing over the last 10 years. My name is Elizabeth Prisbrey. I'm with Stratum Real Estate Group. If you are looking to buy, sell, or invest here in Southern Utah, I would love to help you out with that. Please feel free to call, text, or email me anytime. My contact information is down below in the description. All right, we're actually taking a look at the data for the month of May, year over year, for the last 10 years. However, it is June. I could not pull the data through the end of May 31st until June. So you are getting the most up-to-date information about our housing market for June 2024. Now we have jumped into the slides to give you a visual of what our median sales price has been doing for Cedar City, Utah and St. George, Utah. We have Cedar City here in blue. We have St. George here in green. You can tell from this graph that St. George has had a median sales price higher than Cedar City for at least the last 10 years. Of course, it goes beyond that. We're just going to take a look at the last 10 years so that you can see the trends for May year over year. Now you can see for St. George, the month of May ended out with a median sales price right around $500,000. In Cedar City, it's right around $370,000. You'll notice that that median sales price is slightly down from 2023 for both St. George and Cedar City. St. George has been trending down for the last 2 years in the month of May, whereas Cedar City did not trend down from 2022 to 2023. However, we are getting a slight dip here. Not much, but a little bit. Overall, both markets have continued to appreciate over the last 10 years, which will be an important indication to look at as we go through the rest of the stats, with the exception of slight depreciation here from 2018 to 2019 for Cedar City. Now, what I'd like you to remember about the median sales price is that half of the homes are selling for less than that, half of the homes are selling for more than that. If we were to take the average price, you're going to get a much higher average sales price than you would a median sales price, because you could have an outlier of a really expensive home. So it's always best to look at the median sales price to give you an idea of what that market looks like. Of course, this may not be the range that you are actually looking to purchase in. You could be less than this, you could be higher than this, but it's a solid data point that we can track year over year to see how this market has changed. Now, one of the big indicators that helps us determine that median sales price, or that controls it, is going to be our absorption rate. That's our month's supply of housing. So if no conditions changed in the market today, meaning no more homes were listed, it would take us that long to sell the current homes on the market. You can see for both St. George and Cedar City, we're sitting just under a 3.5 month supply for both of these cities. That month's supply has gone up a little bit for Cedar City from last year. However, it went down slightly for St. George from last year. Both are higher than what we saw in 2020, 2021, and in 2022 when things were beginning to correct. And honestly, we have a higher month supply of housing for St. George than we've seen since 2016. So that's why you see St. George just really continuing to appreciate here. Now, Cedar City from 2018 to 2019 did have an increase in the month supply of housing, which is why you likely see depreciation here from 2018 to 2019. Now, I know these are several years ago, but I want you to kind of see the trends that happen as we take a look at the month supply of housing. If we have a higher month supply of housing, that means there's more homes on the market. That means buyers have more options, and that makes sellers just a little bit more agreeable to buyers' terms. A balanced market is typically considered around a 5 to 7 month supply, right around in that 6 month supply range. We haven't seen that for either of these cities since 2015. That's when both the buyer and the seller have negotiating powers. However, it hasn't quite been that way for a while. Sellers have had most of the negotiating powers over the last several years. As we see this monthly supply of housing continue to go up and we get more listings on the market, buyers are getting more of that negotiating power back. When a home hits the market and there is enough inventory out there for it to be compared to other homes, the market will determine what that home is worth. Now, the days on market really tells us if those homes are priced correctly. Back in 2021, 2022, homes were on the market for about 5 or 6 days. That's the median days on market, meaning some of those were going for less than that, some were going for more than that. That means there was a high demand for homes, and that skyrocketed our pricing. Now you can see as inventory went up in our monthly supply, so did our days on market. That means that the buyers did have more negotiating power. There were more homes for them to look at, meaning those homes sat longer on the market if they were not priced correctly. Now, pricing has started to correct over the last few years. The market has been stabilizing, and and we're starting to see those days on market come down. I believe this is because sellers are doing a better job at pricing their home for the market that we are currently in and not for the market we were in 2021 and 2022. But pay attention to this days on market. Of course, you saw a major dip here 2021, 2022. If you have listed your home on the market and it's going above where the median days on market is, chances are it's not priced correctly for the location, the age of the home, the condition of the home, and you might want to take a look at your listing price and see if you need to make an adjustment there. If you're a buyer and you're seeing that that home has been sitting on the market longer than the median days on market, you probably have some negotiating power on your side. However, if that home has just been listed and it's not been on the market for very long, but you really want it, you might want to come in a little bit more aggressive with your offer. That's why you want to pay attention to the days on market and the monthly supply of housing. So for Cedar City to end out the month of May in 2024, we're sitting right around 30 days on market. And then for St. George, we're sitting right around 24 days for those median days on market. Now let's take a look at the cities individually. We'll do Cedar City first, then we'll do St. George. I went ahead and made sure we can look at new, active, pending, and sold all at the same time so that you can see how they trend together over the last 10 years. Your active listings are in red here. Those are all the homes that are currently on the market waiting to be sold. Then you've got your new listings here in blue. Those are the ones that came on the market in the month of May year over year. Pending are those that are in escrow, meaning they are in contract, getting ready to close. They're no longer active, but they haven't quite closed out or sold yet. And then of course, green is going to show our closed listings. For the most part, our new, pending, and sold stay within the same range as each other. You see a little dip here in the sold listings in 2020, a big increase in 2021, and then it went right back down in 2022. The one we really want to pay attention to though is our active listings, meaning all the homes on the market that are currently available. That's what affects our monthly supply of housing. You can see it went from over 300 homes back in 2015 when we had a more balanced market, right around that 5 to 7 month supply. However, it has gradually gone down until 2021 when we had less than 100 homes on the market, closer to about 75, 80 homes active on the market. That's why they were going so quickly. There really weren't many options for buyers, and when they did come out, they were snatched up quickly. Now that has begun to go back up. It went back up in 2022 as we started correcting. It stayed about the same in 2023. Remember, we really didn't see any depreciation from 2022 to 2023 in Cedar City. However, notice we're starting to see a little bit of depreciation from last year in 2023 to this year in 2024. Notice what's happened though in our active listings. We have more listings on the market, which means more negotiating power for the buyers, which means our median sales price is going to be affected. Now, as far as St. George goes, you'll notice the same thing with our active listings. Huge dip in 2021. Back when it was a more balanced market for both buyers and sellers, you're getting up to about 850, 875 active listings in St. George. Those have gradually gone down all the way until 2021 with the big dip, and then an increase in 2022, and then quite a significant increase from 2022 to 2023, almost 150 homes there. Well, you see that in the depreciation from 2022 to 2023. As more homes went on the market, the median sales price in St. George did go down. Now, active listings in St. George went down a little bit from 2023 to 2024. However, not so much that it has a huge impact on the housing market. You'll see the median sales price did depreciate slightly from 2023 to 2024. That one's kind of an outlier. It'll be interesting to see what happens at the end of next month. You can see the monthly supply of inventory is going up, which means there are more options for buyers and sellers. So what does that mean for home prices and where are they heading? Although we've seen a little bit of depreciation for both of these cities, if we take a look at the month to month for the last 12 months, we can see that the home prices are fluctuating. This has so many factors. It could be time of year, it can be interest rates. What we really want to look at is the raw data. We have been seeing more listings come to the market lately, which gives us a greater monthly supply of housing, which gives a little bit more negotiating power to the buyers and makes it a little bit more balanced for both buyers and sellers. We also see though that the days on market is going down, which means sellers are getting more aggressive with their pricing. Based on that, we can likely see some appreciation still happen. I don't think that it's going to be significant because I do feel we are still correcting, the boom that we had a few years ago, but I also don't see extreme depreciation here. A lot of it will have to do with mortgage interest rates and bringing buyers back to the market. So where are those mortgage interest rates headed? Well, if you watch this every month, you know I like to look at the inflation rate. I like to look at where the mortgage interest rate is currently, and I like to take a look at what some well-known sources are predicting for those mortgage interest rates. The first one we'll start with is the inflation rate, because as we know, the Fed funds rate tends to follow the inflation rate, and mortgage interest rates tend to be indirectly affected by the federal funds rate. Now, this inflation rate chart is always a month behind, so it's taking a look at the end of April. You will see that in March, we had about 3.48% inflation, which did go up from February, which is why we saw those mortgage interest rates go up. However, we did see it slightly go down, not much. It just went down to 3.36%. However, if you take a look over here, you can see that the targeted rate is a 2% inflation. So that's what they are looking to get to. We have not been there in quite some time, but it is a good sign that it is trending downward. It has been pretty volatile this year, so we won't see any big significant changes in the interest rates. However, if we take a look at what Freddie Mac says is the average 30-year fixed mortgage rate, it's right around 7.03% right now, which is pretty high. We saw it dip down to just under 7% about a week ago, May 23rd. It was up to 7.22%, so that's a pretty significant dip for that average there, but we are up again into the low sevens. Now we're looking at the blue line here because that's our 30-year fixed mortgage rate. The green one below it is going to be for a 15-year mortgage. We're taking a look at the 30-year. Back in January, we did see it dip down to 6.6%. So knowing that we're about halfway through 2024 now, we're right into the 7% as far as interest rates go. I want to take a look at what some well-known sources are saying about mortgage rate predictions. This is an article from NerdWallet. You can see that Fannie Mae is predicting that we're going to stay in the low sevens to finish out 2024, not dipping below that again until the first quarter in 2025. Mortgage Bankers Association, or MBA, predicts that we're going to be in the high sixes to mid sixes to finish out 2024, and we'll start 2025 right around 6.4%. That's a big variation between the two, but we can see that those rates aren't going that much lower. So it's important to realize and acknowledge that this is the market that we are in. The interest rates are higher than we've seen over the last several years. They don't look like they're going down anytime soon unless we see a significant decrease, which recently it has been pretty volatile. So when it comes to selling your home or purchasing a home, you really need to make sure that it is right for you. Watch the data, watch the trends, get with me so that we can see what your home would list for, how long it would take you to sell, and if it would be beneficial for you financially. Same thing if you're going in to purchase a home. Let's sit down, let's get you with a lender, let's make sure that you have everything prepared and in line for when those mortgage interest rates do drop. When those drop, there are going to be many buyers that were priced out of the market that come back to the market, which means bidding wars, which means home prices going up. So really check your finances, see what you can do, see what you need to do, and let's figure out a plan for you if purchasing a home is a goal of yours. Maybe you need to relocate, maybe you need to downsize, maybe you need more space. Whatever it is, let's make a plan for you. Whether it's now, 6 months from now, a year from now, let's figure out what your best options are so that when the time is right, you can be educated and move forward. All right, remember, my name is Elizabeth Prisbrey. I'm with Stratum Real Estate Group, and I really would love to help you buy, sell, or invest here in Southern Utah. Please feel free to reach out anytime. I promise you I will respond. All right, until next time, have a wonderful day.